Good morning, guys. It's Chris from daxtrader.co.uk. It's Wednesday, 27th of September, and this is the Dax Technical Analysis. And I am just going to check that we're all set up, ready to go. Yeah, I think we are. Excellent. All right. So we've completed a webinar just a moment ago. So we're going to do a quick summary of what we've just run through. Okay, moving on to the TPO for today then. So yesterday we pretty much completed a value area inside the value area from Monday. And in fact, we've pretty much traded inside the entire range of Monday as well. So not a lot to really say. We had a trade to go short, which didn't work out. A couple of opportunities to take some profit, but didn't really meet the objective that we had in mind, which was a break outside of the recent channel that we've been rotating in. But unfortunately, the traders continue to rotate within that channel. The prices continue to rotate within that channel is what I meant. Instead, now we've actually gapped higher this morning and we've popped above recent resistance. And we're inside this kind of value area that started in July. So we've got to see now whether we pop above that. If we do, we've almost got a fairly clear run towards the 12,750, 12,800 target we've been discussing. The only potential barrier is this area here. From this inside bar back on the sort of end of June, where sellers definitely stepped in with some force. So keep an eye on that as a potential barrier. Would I go long at this stage? Well, unfortunately, no, because there isn't a whole lot of headroom to run into, and we still haven't had any kind of meaningful pullback. So it's been tricky to pick our spots. So really the main thing, there's kind of two strategies we've been looking at for today. The first one is continuation of this channel rotation. You can see the channel pretty clearly. It's just a simple regression channel with quartiles and an upper octile and lower octile. And of course, you can clearly see that there's been opportunities to fade the extremes. Now, fading extremes is basically counter trend. If you think about it, you're kind of expecting for price to continue the way that it has been moving. So it's difficult to fade a move when you're looking to follow a trend. So it's been tricky to trade the swings in this channel. So if you were doing that, then that's the other one up here. You've got an extreme at the top of that channel there. And you could also argue, as one of the guys in the group did, we've got a dead fork here, which I'm just going to wake up to show you because it's currently quite light. There we go. If we add some of the warning lines on here to sort of extend them out, might not well have been that fork. So I will do the same one again. I'll just redraw it. Must have deleted it. Haha. Maybe it was this one. If we did a warning line to kind of extend this and almost make it a channel. In fact, I think it probably would be a channel, wouldn't it? An ACR channel. It shows you that that's the potential area for that to kind of top out. So there's another reason that maybe this channel could continue to rotate there. But because I've just taken the trade out, I'm reluctant to jump into another one straight away, just in case it's a sort of a revenge trading mission. I don't want to get into that. So that's one strategy that's available for today. The next one was going to be potential pullback. So if we were to go and take a look at a more basic setup here, map out these minor swings inside this. I mean, this looks more like a sort of an expanding triangle sort of fan. But if we were to just map out the minor swings inside here, then you've got what looks to be a bullish trend, which then started to fail as we took out the low. And it looked to be a bearish trend, which then failed as we took out the high. So it's been a bit choppy, as you can sort of see for yourself. But if we assume that this current move, I'm just going to remove this fork here. That was the extended sort of warning line fork I was trying to redraw just a moment ago. If we draw a Fibonacci tool from the low to the high, you'll notice where that gap falls, right in the middle, 50%, which we found interesting there. So if we were to take a fork and try and map out the potential retracement zones, that's what this little circle area would have been. So if you were bullish and wanted to be buying the market, and then an aggressive potential entry would be here, assuming that the gap does not close. And then you could hide a stop loss in there. It's not the best stop in the world to take a break higher. Very, very aggressive, but it's an option. And I think the only other bit that I found interesting was this fork. Again, if I just put that basic fork in and start taking away some of these warning lines here, there we go. So we drew this fork in from that swing, so ABC. Yeah, nice and simple. Basic fork, nothing unusual about it. And we were looking for a retracement. That was kind of roughly what we were looking to short from. And we touched a median line here. So in hindsight, analyzing the trade that we took, could have A, moved our stop loss to break even at that point, or B, we could have perhaps even realized that as we went into this sort of swap zone, failed to make any progress below it, and then failed on the second attempt to make any progress below it, then that should have been an opportunity to manage the trade. And at the end of the session, should have been an opportunity to either move to break even or get out of the trade. Because, of course, we had the gap higher and then the pop early in the session today. So that will go down in the learning for the journal. Keep an eye on things like that. So now we're going to look for the next potential move. And you could even argue that we're currently starting to form the basis of a minor swing bullish trend. So this is the first one here. Just remove these letters. So if that's your first one, it looks to be that this kind of A and B here, AB, it's very similar size to the BC, maybe. Might take that move back. But either or, if that is the beginning of the next trend, you could start to predict that it continues to move. So that's another one that sort of feeds into this little bullish strategy we were talking about in the webinar. All right, we were looking at other markets as well. I won't do those now, but we're trying to find out if there are any clues as to what risk sentiment is, what's going on in the US indices, what's going on in gold, what's going on in some of the other currency markets. And pretty much the conclusion is at the moment, no. Don't think we're going to be seeing any kind of clear risk off sentiment, which is what we were looking to support a bearish trade setup. So we might have to wait until we get into October, which tends to support that view. And that's it. So a couple of ideas there. Go back and have a look through those, see if you agree with them. Otherwise, we'll be back tomorrow with another webinar. I believe John will also be around to do a webinar as well. So be available around about 8:30 tomorrow to get involved in that. We'll send the link out in the channel as well. Have a great trading day, and we'll catch up with you later, guys. Take care.